Most people spend their entire lives working for money without ever learning how to make money work for them. That ends today. Here's the thing nobody tells you. You don't need $1 million to start building wealth. You don't even need 50,000. I'm going to show you exactly how to do it. Whether you've got 5 grand, 50 grand, or half a million sitting around. By the end of this video, you'll know exactly which one you are. And more importantly, you'll understand why starting early beats starting big every single time. Look, most people live paycheck to paycheck. Money comes in, bills go out, nothing's left. And honestly, that's exhausting. Because nothing, absolutely nothing, is working for you while you sleep. But here's what's interesting. I talk to people constantly who say, I don't make enough to invest. I need to be rich first. Investing is only for rich people. And I get it. These feel true, but they're not. Here's the actual truth. You don't need to be rich to start building wealth. You need a strategy, and you need time. That's it. The average person has less than $5,000. Young professional? Maybe 30, 50,000. You've had some success? Maybe you're sitting on 500,000, but almost nobody shows you what to actually do with whatever number you have. That's the gap. That's what we're filling today. Before we get into the numbers, let me explain why 2026 is actually the right time for this. Interest rates are elevated. Inflation is still sticky. And here's the part that matters. Individual dividend stocks are paying better than they have in years. Think about that for a second. Real companies, Coca-Cola, Procter & Gamble, Johnson & Johnson, not meme stocks, not trendy plays, just boring, stable, companies that have paid and grown their dividends for 60, 70 years. That's not luck. That's a business model tested through every recession, every crash, every crisis. So when you build a portfolio with these companies, something interesting happens. You start getting paid every month while you do literally anything else. Okay, let's talk about the real money. You've got $5,000. Maybe you just started working. Maybe you've been saving for a couple years. Maybe you had a lucky break. Here's the real expectation. You're generating about $10 to $15 per month. $10 to $15. I'm not going to lie to you and say that's life-changing, because it's not. But here's where people completely misunderstand dividend investing. You're not building wealth from that $10. You're building wealth from 3 things working together. First, that $10 automatically buys more shares. Second, these companies raise their dividends every year. So 10 becomes 12, becomes 15, becomes 20. Third, the companies themselves go up in value. Your 5,000 could be 8, 10, 15,000 in 10 years. But honestly, here's the real win. You're already ahead of 90% of people your age. You've already started. Your money is already working for you. And that feeling, knowing you're not just trading time for money anymore, that changes your psychology in ways money can't even measure. All right, now the real magic starts. $50,000. If you're 35, 40, and you've been working steady, you've probably got this. This is where things stop being theoretical. Here's the real number. You're generating about $100 to $150 per month, every single month. Think about what that actually means in your life. Your gym membership, paid. Your Netflix, Spotify, Disney Plus, all of it paid. By an asset you own, that's doing nothing. Or think about it this way. That's a really nice dinner out with your family, every month, for free. And here's the thing that freaks people out. But what if the market drops? Good question. Markets do drop, sometimes 30%. But here's the reality check. Markets don't move in straight lines. Some years you make 15%, some years you lose 10. That's normal. That's expected. That's literally how it works. But here's what actually matters. Your dividend keeps coming. The company keeps paying. And this is key. Long-term investors who actually bought during crashes made way more money, not less, because they got more shares at lower prices. So yes, there's volatility, but volatility is just the price you pay for compounding. And compound returns? Compound returns are stupid good. If these companies just raise dividends 5% annually, which is actually below their historical average, in 10 years you're making $250 to $300 a month. In 20 years, you're not even thinking in terms of portfolio anymore. You're thinking in terms of freedom. But here's where it gets crazy. $500,000. If you've got this, you either built a business, crushed it in your career for decades, inherited something, or you and your partner combined resources. And honestly, this is where dividend investing stops feeling like a side project and starts feeling like an actual income stream. Here's the real number. $900 to $1,400 per month in dividend income. Before your portfolio even goes up in value. Just sitting there, earning you money. Let me paint the picture. That's your mortgage. That's your car payment. That's a significant chunk of your monthly life expenses. Covered by assets, not your job, not your boss, not your salary. And yes, this is subject to market volatility too. But at this level, volatility just becomes noise because you've built enough that the bad years don't scare you. That's when you realize you've built actual optionality. You could choose to work differently. You could take a year off. You could pivot to something you actually love. You could take real risks because you've got a foundation that doesn't depend on your paycheck. That's not just wealth. That's freedom. Now let me be very clear about something. This is not get rich quick. This is not 5,000 to 500,000 in a year. This is not Lamborghini money. This is build actual wealth over actual time with actual discipline. And honestly, that's the only way it works anyway. So here's what trips people up. Most people panic. When the market drops, when things get scary, people suddenly become long-term investors. What I mean is, they sell at the bottom and become employees at McDonald's again. They bail right when they should be holding. Other people check their portfolio 17 times a day, just to lose money emotionally. And some people never start because they think 5,000 isn't enough. So let me be clear. 5,000 is enough. 50,000 is enough. 500,000 is enough. The number doesn't matter as much as the discipline. Start, hold, reinvest, repeat for 10 years. That's the whole system. Here's what you actually do tomorrow. 1. Open a brokerage account. Fidelity, Vanguard, Charles Schwab. 15 minutes, free. 2. Fund it with whatever you have. Your number is the right number. 3. Buy the portfolio. 70% broad index, 30% individual dividend stocks. Or follow the allocations I mentioned. Both work. 4. Turn on dividend reinvestment. 1 click. This is where the magic actually happens. 5. Then forget about it. Seriously. Don't check it daily. Don't panic sell. Don't overthink it. Wealth building isn't entertaining. It's just slow. Here's the truth that changes how people think about money. You don't need to be rich to build wealth. You need a clear strategy, consistent action, and patience. $5,000 might generate $10 to $15 per month. That's humble. $50,000 might generate $100 to $150. That's meaningful. $500,000 might generate $1,000. That's real income. But look what they all have in common. They're all working for you, every single day. While you sleep, while you work, while you're completely distracted, your assets are generating income independent of your job, independent of how hard you work, independent of how many hours you trade away. That's something most people never experience. And here's the real thing. It doesn't matter if you start with 5,000 or 500,000. What matters is that you start. Because 10 years go by either way. 10 years from now, you either have a portfolio generating real income for you, or you're still wondering what if. I know which one I'd rather be. Wealth isn't built in a year. It's not built in 5 years. It's built by doing small things consistently, over long periods of time, by letting compounding do its work, by trusting the process, even when nothing seems to be happening. Especially then, start where you are, with what you have. The best investment you can make is the one you're willing to stick with for the next 10, 20, 30 years. Not the most impressive one, not the fanciest one, the boring one, the one you'll actually keep doing. That's how actual wealth gets built. If this helped you understand how wealth building actually works, not the fantasy version, the real version, drop a like. That helps these videos reach people who actually want to build wealth, not people scrolling for entertainment. Subscribe for more real content, not shortcuts, not schemes, just strategies that actually work over actual time. And comment below which portfolio resonates with you, the 5,000, the 50,000, or the 500,000. Let's start a conversation about where you're going financially, because that conversation matters more than you think. I'll see you in the next one.